Hey everybody, how we doing? Chase here. So I want to talk quickly about liquidity zones. This is definitely something that Trooper will be covering a lot. So I'm just going to give some simple explanations about it, how I look at them, etc. So as we can see here, this was our old bottom here at let's see, a low of 6,000. I know on MEX it was like 58.55. And I guess that's a good point to talk about as well. You'll see that I often chart a lot of my stuff on Bitfinex, and the reasoning is when it comes to and this should have been in the last video, but I'll quickly explain it. The reasoning is when it comes to formations, right? When you're looking at, like, say, a falling wedge, if there's a breakout on the BitMEX chart, a lot of people will FOMO the price up. They think it has actually broke out, but on the Bitfinex chart, it hasn't broken out. And Bitfinex is the chart, so to say, or basically the market that leads this whole market. I know that the BitMEX has the highest volume, but Bitfinex is where the market is led. Or Bitfinex basically leads the market. Wherever the Bitfinex price goes is where the rest of the market goes. And there is a reasoning for this. If you are talking about BitMEX, specifically understand that BitMEX, the wicks and whatnot, right? So the big things that happen on BitMEX can be very volatile because there's so much leverage allowed. Okay, there's so much leverage accessible. So sometimes you'll see like a breakout of a formation, right? And you could have some kid out there who does, an 100x long with $100,000, and all of a sudden the price pumps up another 30 points. Okay, pretend there's not a lot of orders on the book. All of a sudden the price pumps up another 25 points, and you're like, wow, it's breaking out. But you look over on Bitfinex, and no one's buying actual Bitcoin. It's someone who's extremely over leveraged, just being, for lack of a better word, an idiot, making the market look a certain way. So, sometimes the market can be dumping really hard, right? And all of a sudden, some whale comes in with let's say a 10 million or a 15 million market short, and he market orders, and he just pushes the price down even further on some huge wick, but no one even sold that Bitcoin. That was just his reaction. Okay, so I'm a big believer in often using the Bitfinex chart to get more accurate reads on the situation. All right, but back to the topic at hand. Here was the liquidity zone below 6,000. So what does that mean? A liquidity zone is basically the place where, let's say the big players, or quote unquote the banks, people would say the banks, but in our market it's really just the big players, or the whales, or whatever you want to say. They know that all the stop losses are set here. Okay, so anyone who is looking to, say someone longed from here, right, or say someone longed from here, anyone who longed in this area was thinking, okay, I'll set my stop loss below, this low here. Okay, this is the lowest low of 2018. This is where I'll set my stop. All right, so the big players know that everyone has their stops set below this point. So they push it into this liquidity zone, right? And they get all their orders filled, because at this time, what's happening in here is all the stop losses are getting triggered, and those people are forced to sell their long orders to, whoever's looking to buy them. Basically the big players and the whales who are looking to buy them. So what do? They run the liquidity zone once, people long it, and they put their stop back below the level here, okay, or they put their stop back below this wick. What happens next? They run it again. Okay, now everyone thinks, they're like, oh, okay, we're good to long. The stops have been ran, we're good to go. And they do it again, okay, and then you start getting some movement. Now, we're just seeing, basically a rejection off of, around 67.50 or so. So we'll have to see how we react to the level again. Remember that, and first off, don't think whales didn't get a piece of this, because they filled their liquidity zone, right, and they've earned over 1,000, 50 points, and that's a really big move when you're talking big money. So they've definitely got their licks off of this. It doesn't need to continue to move up from here. We'll see how it works though. So talking, the liquidity zone, and just remember, the more we tap into this zone, the more likely it could break eventually. So that's simple. Liquidity zones. If they're looking to run the stop losses, they need liquidity. They need orders to fill. They have to run the stops. Where are the stops? The stops are below this low. Okay. It's the same thing on like the smaller time frame when we're talking about swing failure patterns, or bullish or bearish SFPs. Once again, this is a thing Trooper will be covering most likely a lot more in depth than me. So I'll just give my quick view on it. Basically, you have your sort of local swing high here, so to say, your local swing high, and we get right here a confirmed. Now there's two options. There's two ways to play this, of course. You can say this, which is a bit more of the risky strategy, but often a strategy that people prefer because it's it's very simple, right? You can just set your orders, and you can go to sleep, whatever you want to do. Set your orders, if you're at work, etc. So what you would have here is you would have your, this is your liquidity zone right here. This is where all the stops are, right? So you have a layer there, you have a layer there, and you have a layer there, okay? Something like that, all right? That's how I would set it up. I like to set it up with layers. That way, when I have my stop loss, right? When I have my stop loss can be an average entry that's not as far away. If all my orders fill, look, my stop loss is so close, not a big deal, okay? So that is the first way to play a swing failure pattern. Second way I would look to play it, often the way I personally look to play it, is to simply wait for the confirmation. So what we could see here is a push into the liquidity zone, another push into the liquidity zone, and then candle closes. Remember, candle close below the liquidity zone. And remember, when we're talking about candle closes, there's not always a specific time frame we're looking at. Often we're thinking that, okay, just the higher the time frame, the more confidence you can have in the move, playing out the way you're expecting it to, right? So a 5-minute close, sorry, a 5-minute close below the, sorry, TradingView always moves this stuff around. Let's see if we can get back to it. All right. So here we have it. A 5-minute close below this level here would have given us, a pretty decent entry. Only about 20 points off or 30 points off from if you had a preset entry up here. If you moved up to the higher time frame, you would have had about a 40 or 50 point difference. But when you move up to a higher time frame, you'll have more confidence in the thing, or in the position going your way, okay? It's the same exact situation with formations. If you're looking for like a candle close or a breakout or a breakdown situation, the higher the time frame, the more confidence you're going to have. But just remember that if you're waiting for some type of extreme level of confidence, eventually you do have to take some type of a risk, right? Because if you're waiting for some extreme level of confidence, then what's going to happen is the formation is going to just simply drop without you, right? Or the bearish swing failure pattern in this case, it's already gone without you. If you were waiting for a 4-hour candle close, your 4-hour candle close was basically the bottom, all right? So you have to be willing to, weigh your risk versus your reward, and look at which type of time frame you're willing to get into. If you're looking for a preset position, if you are using a preset position, of course, make sure your stop losses are always set. And that's really how I play these, swing failure patterns, whether they're bearish or bullish. If I'm seeing other bearish signs here, if I'm seeing like a bearish divergence, I'll say, okay, even better. So we have a confirmation of a bearish swing failure pattern, and we're getting a bearish divergence. Okay, this looks like a confident short here. I'm in. All right, so that's how I look at liquidity zones, stop hunts, swing failure patterns, all those things of the sort. Hope that's helpful. Okay, thank you. See you guys in the next video.